Greetings everybody, I hope that you guys are good. So this morning we will be having a very quick look at the Adidas chart, as it has been alleged that Adidas has cut ties with Kanye West over the allegedly anti-Semitic comments that he has made recently. In addition to that, it has also been reported that Adidas has went down by more than 9% in regards to its share price. Nonetheless, let us have a very quick look at the actual chart and see what is happening at this point in time. So the first thing that I can see at this point in time in regards to the monthly chart is the fact that we have a very nice M structure at this point, which has a neckline at this level over here, as you guys can see, right? In addition to that, we can see that the neckline has been broken to the bottom side, and you guys know by now that when it comes to M structures, ideally you want to see price breaking to the bottom side of that neckline and then heading back to the neckline to test it, and at that neckline is usually where we would look for potential selling opportunities, right? So what I'm gonna do now is just add a neckline to that M structure, as at this point in time it is very much important, so just bear with me while I do so. And we can say that more or less this is the neckline of that M structure. Another thing that I can see that is also very much interesting is that we've had this series of candlesticks. As you guys can see, most of the candlesticks here are bearish candlesticks, right? Which means that things have not been looking too good for Adidas, right? So the next thing that I'm going to do is to utilize the Fibonacci retracement tool. We just want to have a look in terms of whether the neckline of that M structure aligns with any key numbers that we have on the Fibonacci retracement tool. So let's have a look. Let's see. Just bear with me while I fix my lines. So we can say more or less, guys, that the neckline of this M structure, which is over here, aligns with the 38.2% Fibonacci retracement level, which means that we have confluence. Because remember, guys, I said earlier that when it comes to M structures, ideally we want to see price break to the bottom side of that neckline and then go back to the neckline to test it, and at that neckline is where we would look for potential selling opportunities, right? So just keep that in the back of your mind, that the neckline aligns with the 38.2% Fibonacci retracement level, right? So from here, what I'm going to do is head down to the weekly chart, and here we are on the weekly chart. So the weekly chart is very much similar to the monthly chart in that it's mostly made up of bearish candlesticks, as you guys can see, which, as I've already said, indicates that the market has not really been too great as far as Adidas goes. Anyway, let's proceed. So what else do we see, guys, in regards to the weekly chart of Adidas? Another thing that I see that is also very much interesting is that we have another overextended M structure over here, which has a neckline at this level over here, right? And similar to the M structure that we had on the monthly chart, we expect price to come back to this level to test it, and at this level is where we would look for potential selling opportunities. So similarly, I'm going to add another W structure to that level, and I'm also going to make a different color. I just don't want us to get confused by the various lines or structures that we have added to the actual chart. So just bear with me, guys. So I'll just make it an orange rather. Let's see. There we go, right? And just keep in the back of your mind that the structure over here is the neckline of this M structure over here, right? And then similarly, I'm just going to add the Fibonacci retracement tool again, just to see if the neckline aligns with any key numbers that we have. Let's see. There we go. And we can see that the neckline, which is over here of this M structure, more or less aligns with the 61.8% Fibonacci retracement level, right? And just remember that necklines are in area, and not so much an actual line. Anyway, let's proceed. So what else do we see, guys? At this point I don't see much. I'm just going to head down to the daily chart. Right, so here we are on the daily chart. Let's see. The first thing that I'm going to do in regards to my daily chart is to add my daily channel. So just bear with me, guys, as I do so. Let's see, daily channel. Okay, here we go. There goes my daily channel, more or less. I just need to ensure that it is as accurate as can be. So just bear with me, guys, while I adjust it. Let's see. There we go. So we can see that this is more or less our daily channel, as you guys can see. Let's see. Just bear with me, guys. I just want to make sure that it is as accurate as can be. There we go. That should be fine, right? So what else do we see, guys, in regards to the daily chart? In regards to the daily chart, remember, guys, when it comes to the weekly chart, I spoke about how we have that M structure at that point. As much as we have that M structure, can you guys also see that we have at this point in the M structure, which has a neckline at this point, more or less, right? So similarly, what you expect is for price to come back to the neckline, right, which is over here, and at the neckline is where we would potentially look for selling opportunities, right? Anyway, let's proceed. So what else do we see in regards to the daily chart? In fact, before we proceed, I just want to add another neckline to that structure. There we go. And then I'm going to utilize the Fibonacci retracement tool again, just to see if the neckline aligns with any key numbers that we have on the tool. And there we go. And we can see that the neckline, which is over here of this M structure, aligns with the, we could say it aligns with both the 50 and the 61.8% Fibonacci retracement levels. Can you guys see that? So should price from where it is head back to this level, we will look for potential selling opportunities. However, having said that, we're not just going to sell by virtue of having price retrace to this level. We're going to look for further reasons for why we should be selling, right? But for now, we know that we have two reasons for why we should be selling. Should price retrace back to this level? Number one, we have this M structure, and number two, we have the neckline being broken to the bottom side, and in the future we might have price retrace back to the neckline, and the neckline also aligns with key numbers of Fibonacci. Anyway, let's proceed. From here, what I'm going to do is head down to the H4 chart. However, before I do so, let me just also point out that we have a gap at this point, right? And gaps represent liquidity, and liquidity equates to money, which needs to be grabbed by the market. So should price come back to this level, right, it would make sense for us to look for selling opportunities at this point, and I would actually wait for price, or rather for the market to close that gap, and then I would look for more potential selling opportunities, right? So from here, what I'm going to do is head down to the H4 chart. On the H4 chart, I'm just going to fix my channel, so just bear with me when I do so. Let's see. There goes our channel, more or less. Let's see. Yeah, that's fine. Let's continue. So what do we see, guys, in regards to the H4 chart? In regards to the H4 chart, we can see that we have this candlestick over here. It is a bearish candlestick with a small body and a long wick, which tells us that we have a lot of liquidity stuck at that point. And as I've said, liquidity represents money which needs to be grabbed by the market. So I'm just gonna mark that candlestick where it ends, which is the 94.60 level, right? And that's where I believe the market needs to head to grab that liquidity, right? But if I can just zoom in a bit, guys, at this point in time, I don't see any buying or selling opportunities. But let me just also point out that we have another gap at this point. I hope you guys can see that. And this gap could be as a result of the news coming out that Adidas has dropped, or rather Adidas has allegedly dropped Kanye West in regards to the business that they've been having together, right? So yeah, as I've said, that may be the reason why we have a gap at that point. To add to that, can you guys see that we have a M structure at this point, and it has a neckline at that point? So as much as we have this neckline of this bigger M structure, right, what may actually happen is price may head to this level again, and at this level is where it may push further down to this level, and at that level is where we have this candlestick that's at that level, which represents liquidity. And what may actually happen is we might see price, let me just redraw that, because we have this M structure with a neckline over there. We might see price head back to this level to test it, and then push further down to this level to grab that liquidity. And after grabbing that liquidity, we might potentially see price move further up to give us this W structure. I hope you guys can see that. And at this point again, which is the neckline of this M structure, we might potentially look for selling opportunities. Right? So that is my analysis, guys, in as far as Adidas AG goes. I hope it makes sense. Otherwise, peace out.